Hey folks, it's Greg Rice. We're here at Nexus Property Management's headquarters in Pawtucket, Rhode Island. And right now I'd like to go over what exactly seller financing is and what are some of the pros and cons alongside of it. Now, to put it simply, seller financing is when the owner of a property holds the mortgage note directly to you as the buyer. There's no banks or lenders involved. Sounds great, right? Well, in most cases, folks, it is an excellent way to acquire property. And the biggest benefit of the few I'm going to go over today is you get the ability to negotiate. Now, negotiation is huge. It's totally huge because, look at it this way, if you go to a traditional bank, you're accepting whatever terms, conditions, and requirements they set forth. Those are not up for talks. You need their money. You're taking whatever terms they say. But with seller financing, you get to negotiate everything. The purchase price, obviously negotiable, but we're talking about your down payment, your interest rate, and the repayment terms. So today in Rhode Island, if I wanted to buy a 4-family property, I would likely need from a traditional lender 25% down, 6% interest rate over a 25-year amortization schedule, and it's adjustable after 5, but it can never go lower than my initial rate. So that's a pretty sour deal, but many people have to accept it because they need the money to make the investment. But with seller financing, I'm going to negotiate the down payment. I'm going to negotiate the interest rate, and I'm going to negotiate the repayment schedule. So the ball's in my court. And of course, the seller has to accept these terms, but the beauty and the ability to negotiate is what you want. That's the name of the game. Second thing is, you get the ability to close quickly. Banks can take months. They're so overloaded, they're so inefficient, okay, that they can take months to close your loan. Seller financing needs a down payment, a contract, and a closing. That could be done in days or weeks. There's no appraisals, there's no inspections, there's no fire certs, none of this. Give me the house, I want it now. That's how it works. But you need to be very careful because properties that are seller financed are usually for good reason. And the reason is because banks will not, I repeat, will not loan on them. So there may be tremendous amounts of work. It may be on a brownfield. It may just be a total disaster, asbestos, whatever it may be. There are potential downfalls and flaws that you can encounter, and you want to make sure that whatever the condition is and the property's situation is one that you're comfortable with. Okay, I'll give you a great example. We bought our Nexus headquarters 5 years ago, and it was in such poor condition that no bank would even drive by to look at it, okay? So we had to seller finance, which we did, and after a couple years, we fixed it up, and we were able to refinance with a traditional bank, pay off the owner, and now we own it directly. There's nothing hanging over our head. But what could happen is if you had a balloon payment due and you couldn't get a bank to refinance it, you're on the hook for the entire balance owed, or you're going to lose the house. So that's one of the downfalls is once you enter into a seller finance deal, you could potentially lose it if you miss a payment or you miss a balloon payment, and the owner, the former owner in that case, would retain possession and you lose all of your money. Okay? With a traditional bank, you can still lose the property, but it takes much longer. Okay? So these, in essence, are a couple of the benefits, a couple of the downsides, and I'll tell you this, folks, seller financing is an extremely efficient way to go, but you have to be careful, okay, because you don't know what's going on fully without an inspection or an appraisal. There are things that come up in those reports that you just can't get to yourself sometimes, okay? So keep that in mind. And once again, this is Gregory Rice. We're here at Nexus Property Management, your property managed.